It's time to move up and you're trying to decide, what is my budget? How much house can I afford? So today I'm going to break that down for you. If you're going to be moving up, selling and buying, this is the right video for you to talk about some important things right now. The data would say right now, the average move up buyer has been in their house 10 years. So what we want to think about is what has happened to home values in the last 10 years. What you have to understand is you're going to walk away with proceeds. So I'm going to build off of this as we move along. So first and foremost, we'll talk about the budget. What is the highest and best use of those funds? The right play for the money and found money. If you've owned that house for somewhere around 10 years, what did you pay for it when you bought it? And I'm going to ask you just a very honest, candid, transparent question. Would you call me batshit crazy in 2016 if I told you you would sell that house for this much today? I would challenge you to say you would have said it would sell for that much. So to me, I would refer to that first as found money, folks. This is paper money. Let's be honest. Anybody that's owned a home for this long did not expect the values to be where they are today. If you are going to be out there shopping and buying a replacement home, or even if your insurance policy is renewing, you're not sure if you should sell or not, check out this video on homeowner insurance savings tips. I know I'm in Denver. All over the country, though, I continue to hear the same thing, which is homeowners insurance is effing expensive. So check that video out. There's some things in there, including where I talk about unbundling homeowners and auto and as to why. So let's break this apart. The average debt for homeowners, according to Experian and the Federal Reserve Bank of New York. Auto, credit cards, personal loans, student loans. We're going to break this down. And sorry, Gen Z, but according to the data, right now, Gen X has the highest amount of debt that they are carrying. So you have auto loans on average around $24,000 with auto loans, credit cards, $7,000, personal loans around $11,000, student loans around $35,000. Of course, this varies by generation and where you're at in stage of life. But the data would also say that going into 2026, 70% of households are carrying credit card debt, with average rates of 21 to 23%. So what does that mean for budget? Well, that means for budget, $700 to $1,100 being budgeted for overall household consumer debts. So we're going to build this out now. So let's talk about an $850,000 house using a goal or a target of a payment of $5,000. And I'm debating with my proceeds, do I put down 20%? Could I stretch to 30% or 10%? And I know you may say, Ray, these numbers are whack. However, you can scale it down to your situation as well. It all is the same logic. So stay with me. And as you can see here, you'll see that that house with 30% down would have the lowest rate. There is a thing called loan level pricing adjusters, not to bore you, but you do get a better rate, not at 20% down per se, but once you get probably over 25% down, 30% down, you will see not tremendous, but about an eighth lower in interest rate. And then you see the option with the 20% down in the middle and the 10%, which I have highlighted. There is some private mortgage insurance baked into that payment. And as you see here, these are the proposed payments. So starting with that 30% down situation, the 43.63, assuming $800 a month for escrows, 49.31 followed by 55.69. So in short, I can look at this and say, it's about $600 more in each direction. 600 more to go from 30 to 20, 20 to 10. Should I do that? Keep in mind, mortgage interest tax deductible. But if I have the higher end of that consumer debt and I'm spending $800, $900, $1,100 a month on that consumer debt, the 10% down delta, $600 a month, it might be better served because that would increase my personal cash flow by a noticeable amount. I can plug back into investing, or that I could build up that savings because I want to stay away from that credit card debt. And if I pay off the car, folks, with the proceeds from the house, please do yourself a favor, drive it into the ground. They are depreciating assets. This is just a way for you to think about the highest and best use for what I'm going to call found money. Look, I own homes. It is found money right now. And this is a video you might want to check out, which is a hack to pay off consumer debt before listing your house if you're going to sell it. So watch this video. And this is what smart home sellers are doing as they grapple with affordability going forward. Thanks so much. Keep building that wealth through real estate.